You know who is not celebrating the birthday of the bull market?
Who's that? Peter Schiff.
Mr. Peter Schiff, president of Euro-Pacific Capital. Peter, you don't have your party hat on. You're not going to light any candles for Mr. Bull Market here. What are you doing? Buying more gold?
Well, you have to put the rally in its perspective. I mean, even though we've had about a 60% rally in the Dow off the lows, you know, the market's still off 25% from its peak. It's still below where it was 10 years ago. And if you measure the rally of the U.S. stock market in versus other assets, the rally versus gold, the stock market's up less than 20% in terms of gold. And the markets that I am involved in, all the other markets around the world are doing much better. I know the Hang Seng, for example, is up better than 90% in the same period that the Dow is up 60%, so that's 50% better performance in Hong Kong. But the same is true for index all around the world. I mean, the U.S. stock market is the laggard. And I heard you mention earlier in the program that the economy is in better shape now than it was a year ago. It's in much worse shape. The things that the Federal Reserve and that the government have done over the last year, we're in much worse shape today, financially, economically, than we were a year ago.
How do you think we're in worse shape financially? I mean, you have to look at all the equity that the banks have raised. Clearly, that puts them in better financial shape.
Well, I'm talking. Well, the banks might be in better shape, but the nation isn't, because the banks have simply shifted a lot of their liabilities onto the Federal Reserve, onto the American taxpayer. That hasn't helped the country. Plus, I still think a lot of the assets on the books of the banks are phony. I don't think the accounting is real, based on the new accounting laws. And I think real estate prices are still artificially inflated based on lax lending standards and low interest rates and government support. So I think there's still a lot of problems on the books of these banks. I think when they fail again, the next time there's a bailout, it's going to have to be bigger than the last one.
Peter, but does that necessarily mean, I mean, if you believe that the banks are cooking their books or they have phony numbers or whatnot, I mean, that doesn't necessarily mean the stocks are going to go down. Or are you in the camp that you feel so passionately about this that you do see the banks going down and so therefore they are short in your book?
Well, look, I don't own any banks. I think it's, you're a sucker to buy these banks. I mean, companies, these banks are good to work in. Certainly, if you can get a job at Goldman Sachs, go for it. But I wouldn't want to own the stock. I mean, you're going to get screwed as a shareholder.
Hey, Peter, it's
you're
Joe.
not going to get any dividends.
Peter, it's Joe. It sounds like you're positioning yourself for the inflation trade. On the other side of it, though, you're talking about an economy that does not look like it can grow. That sounds to me like deflation. What's the deflation trade that we should put on?
Well, if you want to look at it from a perspective of deflation, you have to understand what things are deflating against, and it will be gold. You're not going to see prices falling precipitously in terms of U.S. dollars because we're creating too many of them. Longer term, stock prices will probably rise in terms of dollars because U.S. stocks will lose value at a slower rate than will our currency. What you want to do is protect yourself from the debasement of the U.S. dollar. If you want to hedge against deflation, you have to own gold because that's where prices will be deflating. But from the perspective of the U.S. dollar, it's pure inflation. You're going to see prices rising. I think prices for foreign stocks will certainly rise a lot faster than in the U.S. because the economic fundamentals of many of the other nations around the world are much better. We have got real serious problems, and we're making them worse with everything that we're doing.
We'll let Pete go, and Pete, you're always great. But on the back of what Pete just said, I just like to end it with a trade. Take a look at American Barrett today. Go back to Friday. Friday's high was 40.66. Friday's low was 40.04. The stock closed at 40.26. If you look today, we had a bit of a reversal day, a higher high, lower low, closed below that low on Friday. I think Barrick reversed. I think if you're in, you can take profits.
Oh, no, I'm not selling my shares.
I know you're not, Pete. I know you're not. I thought you were gone.
I actually own that stock, so, that one's all right.
Oh, the regulators might be knocking at your door now, Peter. You actually need the ticker symbol.
If Pete has it, it's okay.
I own it for my own account.
Yeah, okay. You better lock your doors. Peter, nice to speak to you. Peter Schiff, the one and only. BK, back at the prop desk, you're also somewhat in the bearish camp. Are you that bearish? Or are you loading up on gold and canned goods?
Well, I mean, I do own some gold positions. I'm not sure I'm quite at the canned goods stage. Maybe I'll build my bunker after listening to Peter Schiff. But the bottom line is, I think on the banks, I do agree that the banks could go lower. I think they have some headwinds in front of them. You're talking about some mortgage problems. They have to buy back some mortgage from Fannie and Freddie. Barney Frank sent a letter to him talking about second lien mortgages. So I see an awful lot of headwinds here. I'm short more of the regional banks. I think they get hurt worse than your big commercial banks.
All right, BK, thanks for that. Time now for some options action.